This is a quick real estate update from Jerry Metcalf Partners, real estate agents on the ground in Atlanta. We're talking about what it's like, what to expect, the pros, the cons, and what to consider to align yourself and your loved ones for the best opportunities. All right, everybody, it's Jerry Metcalf Partners and the Market Eavesdrop. We've got, as always, Bridgett with us today, Chad Carrodus, Adam Vicars, the agents with the Jerry Metcalf Partners team with Atlanta Fine Homes. But you might notice we've got a new face with us. This is Stephen Thomas with Sanctuary Mortgage. He gives us a lot of the behind-the-scenes stats information, helps us with clients. And we're bringing Stephen in to give us a little more insight to share. Stephen, thanks for coming on with us.
Thank you, Jerry. Thank you for having me. Good to see everybody this morning.
So we've been talking a lot. Last week we talked about interest rates are going up and everybody's like, what does that mean? We talked about how the market is going to still be stable, and we tried to respectfully say it's still at like 3.
Yes. Yeah.
And in the meantime, we're going to touch on 2 things today. One is what the market's doing now. You can always tell where the market's going and what it's doing through a very important statistic of builder markets and permits. And then we're going to go into some things in COVID that have seemed negative. Not everybody wants to talk about, but they've got a lot of questions, and we're going to make sure Stephen answers those. Stephen, tell us a little bit first about the market, what it's doing, and what you were sharing with us about building permits.
Sure. So the common thread in the market recently, and it's not a new thing, but it's seen more pressure around it recently since COVID, has been supply and demand. So supply and demand is your basic, economic theories. And right now, there's not enough inventory in the market, in the real estate market. Inventory is around 4.2 months of supply. A healthy market has always been considered 6 months of supply. And as we're seeing, been in COVID, demand really hasn't changed. We've got a lot of millennials that are coming into the arena to purchase homes, but we've seen inventory shrink down. So everything around new construction has been very, very important. And all of the data that's being released for new construction has been very, very positive. And 2 key stats to look at are home starts. That's how many homes have been breaking ground. And another key stat is home permits. So how many builders are applying for permits to build new homes. So home starts, we're up 23% from June of 2020 compared to June of 2019. That is the largest increase that we've seen since 2016. Housing permits is often reviewed and looked at as one of the key indicators of what the health in the real estate market looks like coming up in the future. And housing permits were up in July 19% compared to June. And that is the largest single month increase than we have seen since 1990.
Wow. Wow. So we've got
so everything
a stable
new
market
construction wise
year-over-year.
has been super positive.
So we've got a stable market from 19 to 20. And not only do we have a stable market, even going through COVID, but we've actually got permits showing that we've got strong trajectory of growth in where we go. I'm going to hit everybody with a question because everybody asks this over and over, and I didn't warn Stephen, but people always say, okay, but that just means it's a bubble, it's a bubble, it's a bubble. Like, where's the bubble?
Where is the bubble?
And
how do we know
I
it's
don't
not
know
a
that there
bubble?
is a bubble.
You mentioned
people.
the millennial buyers. You mentioned twice this morning talking about the millennial buyers. And for so long, we've always been told they're waiting. And they might be tired of paying really high rents.
Which goes
So
into the last
they were
song,
on
which we also talked about this morning.
I have 4 millennial buyers. Sorry, millennial buyers.
They were on the sidelines and they were waiting, but now millennials are getting married. So you used to, in 2000, I think it was 2018, I heard this stat, like the largest demographic of home buyers is newly married millennials. So if you want to look to see who's buying a house, go pull out the newspaper and see who got married.
Okay, so here's what's interesting is the stat has been the 40% of the buyer market has been the empty nesters because they have the money or they're spending the money and they value in spending real estate. But clearly that is finally shifting to the first-time home buyer / the millennial buyer. Chad is not even a millennial yet, everybody. and he hates that, except I'm proud of it. The guy's a rock star, and he's not even a millennial. He's a Gen Zer.
He just bought a house too. So Gen Z market.
Yeah, and the Gen Zs are buying houses. I mean, there's an indicator, and it may be the fact that the market's finally stabilizing, it's growing. And we always talk on this show, I love that Stephen just brought it too, is it's just a simple law of supply and demand. The demand is there, the supply is low, the builders are fulfilling it. And the builders are as nervous as anybody, because it was only a little over 10 years ago that the times were so hard. And those of us that went through it, Bridgett and Jerry, I don't know if you were in it, Stephen, but my God, we just can't forget.
I was there, but it was a different market. It was a different market because people were over leveraged and housing was overbuilt. So lending guidelines that have been released since then really protect against that. People were overextended in their homes, so that when their values decreased, they were upside down. Well, if my value has decreased, I'm upside down, and I'm not employed anymore, and I can't make my mortgage payment, where's my incentive to stay in the house? So I'm going to walk away. When you look at this market in reverse to that, we have the largest percentage of ownership of equity in homes. People have more equity in their homes today than they ever have.
Well, to add to what you just said about the incentive to stay. So I remember in 2008 or 9, maybe it was 9, the house I lived in, I thought, gosh, the rent on this house would be half what my mortgage is. So not only was there no incentive to stay because there was no equity, there was no incentive to stay because it was half the price to go rent something than it was to pay your mortgage, which in this market, especially in Atlanta, which is bringing so many people to Atlanta, Bridget's like raising her hand, that's making the market stronger. So Bridgett, what were you going to add to that?
Sorry, I was saying now it's the reverse. It's not quite the reverse, but it's
so expensive to rent.
It's a different market. And traditionally, in times of recession, the real estate market outperforms other areas. People have short-term memory, so they go back to the most recent recession, which was very, very, very real estate driven.
Right.
Well, and as you look over, I forgot this was actually from, I can't remember his name, but he's the ninja. He's a real estate coach. He used to be a real estate professor. What's his name?
Not Larry.
No, but he has a chart that says through the years, the only recession we've been through since the Depression where it's actually affected home prices was the Great Recession, because that was actually the subprime, my AirPods are too big. That was actually the subprime mortgage crisis. So that was where it affected prices of homes. Because we want to talk to you about, let's hit on forbearances. I think there are a lot of, it's kind of the unspoken topic that we want to get some insight on. But Bridgett, Chad, Adam, before we switched, did you guys have anything else to add to that?
I just had the question for Stephen. That's all, just kind of understanding. And I had a client who agreed that it was okay that I bring it up, but I had a client who, had a question about it and trying to understand, because they could, and because of the CARES Act, they chose not to pay their mortgage, even though they could pay it. They just didn't want to.
Yeah.
So now they want to sell.
Just to add on, I mean, it's at every price point. I mean, because I mean, that's $1 million+ home. So,
right.
Well, those mortgages get big, so then it becomes a bigger decision. So there's a lot of people who weren't paying their mortgage. So now it's like, okay,
they think they can't buy, or they think that they're like,
they can't sell.
They try to buy another house. Well, that's not the case. And Stephen was going to speak to that.
So the CARES Act was one of the proactive responses that was created to help ensure the real estate market stayed in a healthy status. And a lot of people applied and went into forbearance as basically an insurance policy, I would say, to be prepared in case they did have any adverse action on their employment. They would already have it set up in place. Maybe they've already been able to save some extra dollars. So really just in preparation for the what ifs. A lot of people did go into forbearance, and as it turns out, a lot of people did lose their jobs and their income and everything remained stable through it. So really we have clear guidance. We have clear guidance on how conventional loans are handling clients that were in forbearance. So really there's 3 ways that somebody can purchase after being in forbearance. Number 1 is they filed for it. They ended up not needing it and they continue to make all of their payments. Well, that person has made all their payments. They're immediately eligible to purchase a home. Number two is somebody did miss some payments. If they fully satisfy the balance of the missed payments, then they're immediately eligible to purchase. Number three is once the forbearance ends and they make 3 on-time payments, then they're eligible to purchase.
Consecutive on-time payments.
Consecutive on-time payments. I think an important caveat of the second way to purchase, which is fully satisfying the missed payments. Important thing to note there is selling your home counts as fully satisfying the missed payments, and that person is immediately eligible to buy a new house upon selling their old house.
That's huge. I think a lot of people don't know that if you went into forbearance and you don't have to make up for it, you don't have to wait until the payments are made. As soon as your home is sold and you paid the note, that satisfies the forbearance, and that does not affect your credit either if you do it that way.
Well, part of the CARES Act was that loan servicers are not allowed to report these payments as missed payments.
Hey,
wow.
Is it too late to go into forbearance?
Yes, Chad, you can't buy a house and then go into forbearance.
That's what I was asking earlier. Like, man, hindsight's 2020.
Push in a little bit.
Chad will get creative, right? So that's powerful information. I think there are a lot of people who have those questions and don't want to ask. I think the other thing it's important to know is how many people, went into forbearance for the reasons of there's so much uncertainty. We still don't know what the future holds, but it looks bright. Go ahead, Chad.
Well, it's a great insurance policy, like Stephen said, because, no matter where you're at in life, or what price point or whatever, you don't know what's going to happen with your employment or whatever. And if you're on the hook with a large mortgage and, you're in a position to save it, it makes sense.
So a question that I think everybody probably has is that, okay, so you missed payments, you started paying your payments, you're making your payment, you've made your 3 consecutive payments on time, but what about those 3 or 4, I don't know how many, whatever the payments were that were missed? What about that? What happens to those?
Well, so that when you exit forbearance, right, there's 3 main ways that you can handle exiting forbearance and handle the missed payments. So number 1 is you can fully satisfy the missed payment. So if my mortgage payment is $2,000
right, but what if you didn't? That's what
I missed 3, then I can pay the $6,000 to bring it current. Number 2 is I can add it to the balance of my loan and add it to the end of the term. So instead of I'm basically going to make 3 extra payments after my loan would have been paid off. And then the third way is you can pay a prorated amount over a certain period of time, a year or 2 years.
Now, who's going to do that?
To bring it back.
Who's going to do that when you can just eventually sell it?
I think you do want the taxes and insurance at least. I think you can tack on, is that how it works? I think you can tack on the actual mortgage payment, but somebody's got to pay the taxes and insurance. So that can't just go.
Yeah, your escrow is always going to be pulled out of your escrow when it's due.
Right. Okay. Because it's an escrow anyway. So, great point, Bridgett.
Then they have to. A lot of people have a lot more in their escrow than they need.
There should be a 3-month buffer.
Right. And a lot of people have like a year and they don't realize that, and they can actually get it back. So there's buffers that they have buffers.
Bridgett always knows the tricks. You better watch out, Chad. She's out to get you.
Posey style.
Actually, Adam's got all the tricks. Watch
out. The quiet one.
Exactly.
Watch out.
Butterfly.
Exactly. So I think this is great because sometimes I get this sense that people like, the market's great for everybody else, but I don't want to talk about it, but I went into forbearance or this happened. But there's so many ways for that. That's what is keeping the market going, is there's so many things that are kind of built into the market that keep everybody in and everybody moving. And there seem to kind of be situations or solutions for every situation because of the CARES Act and great people like Stephen who know what they're doing and can help us keep our properties moving and help our clients move.
Thank you.
Anybody else have anything go ahead.
I said thank you for joining. Thanks, Stephen.
My pleasure. Thank you for inviting me.
So everybody, we'll have Stephen tagged if you've got questions for us, questions for Stephen. We are here to help, and thanks everybody for listening in again. Chad Carrodus, Bridgett Posey, Adam Vicars, watch out. And Stephen Thomas with Sanctuary Mortgage. We'll see you soon.
Watch out.
Thank you to our ambassadors and clients for your support of Jerry Metcalf Partners, where our mission is to deliver the best service and the best results for our clients' needs, their wants, and their families.